Hey everyone, welcome back to my channel. If you haven't been here before, my name is Rian and I am also known as RT Investing on the eToro platform. If you don't know about eToro and you see something that you like in this video and you want to try it out, you can find my sign up link in the description down below. And also, give this video a like. It helps me out a lot. It helps out the channel. So without further ado, let's get into the topic of today. Now, things are just getting worse. I think anyone that is watching the stock market is just feeling the pain in the market. And today is the 21st of January 2022. And hey, let me just interrupt this video very quickly. Before you continue to watch, I just want to mention that it's important to understand that you should never invest with money that you would need in the next 5 to 10 years. Always invest with money that you can, go without for that period of time, because then you will not get into a position, where, you might have to sell your investments at a loss to cover, unexpected expenses or unexpected, stuff that breaks or whatever the case may be. And another thing is, before you invest, always make sure that you have a fully funded emergency fund that would cover 3 to 6 months worth of expenses. Only then would I recommend that you start investing any money into the stock market. Also, this is not financial advice. Anything that you see or hear in the video is just my opinion and from my perspective, and you have to always do your own research before you invest into anything ever. Back to the video. And honestly, things are not looking good. And, the big question is, when will the pain end? And the honest answer is nobody knows. Okay. Now, the only thing that we have to use, or that we can use to our advantage, is history. And, history tends to repeat itself. But, I am not a professional in technical analysis. But I would just want to, for the purpose of this video, just show you one chart. And, this chart, it doesn't even need a lot of explaining. I've drawn one simple line. And, just by looking at that line, I will give you the opportunity to just make your own conclusion. And, so let's look at it. I'm going to show you. So this is the VTI, which is the total stock market, the American market, total stock market. And you can see that I'm looking at the chart on Yahoo Finance. And if we just zoom in, on this chart, let's just go a little bit back. So you can see here, 2002 all the way, we had the recession back in 2008. We had a massive drop in the stock market where, this was, a lot of pain that the guys experienced back then. Fortunately, I was only 18 years old back then. I wasn't in the market, so I was completely unaware. But so what I've done is I've just, drew a line from the top, the first top we had after this major crash. And then also I've linked it up to, sorry for moving around so much. And then I've also linked it up to the top, that we've had there here in 2020, just before, we had the big drop, the COVID-19 scare to the markets. Now, if you look at this line now, to me personally, this looks like a very natural inclination to the market, like the trend that it was on since 2008. So you can see like it almost always goes up to this point. And then what happened after COVID? What happened at this point? It kind of like bounced back, within less than a year, it bounced back. And then what happened here? So the big thing to remember is, what did America, or what did the American government decide to do? They decided to keep the economy alive by providing stimulus to the economy, by putting cash into people's hands, because not a lot of people, or a lot of people lost their jobs and they didn't have any money, or not any money, they just couldn't make ends meet. So the government decided to give people stimulus checks. And so a lot of people didn't actually need those stimulus checks. So they had like an excess amount of money. So it had to go somewhere. And many people chose to invest that money. They chose to try out, the stock market, or try out crypto, or or whatever the case may be. And so we saw that just caused a lot of inflation into the market, like a lot of new money, unexperienced, not smart money. Like, there was just a big influx of money into the markets. And this, you can basically just see it. You don't need to be an expert to just see, how overinflated this market, has become. Now, the pain that we have been feeling now is literally this small little drop here from 242. I think that was the peak, 242 up to, where we are now at, what's this, 225. So if we were to follow this natural, healthy growth in the stock market, I'm not saying that we are going down to, what would this be, a straight down? Like, let's say it's going to go over time. So I'm not saying we're going down to like 197, 200. But if we did, I honestly would not be surprised. It would just be a healthy correction, to the markets, people taking profit. It's been, overextended, overbought, like we've never seen before. And so just by a novice looking at a chart, a novice that drew a line, if you just look at this. So in my opinion, look at this, for us, in my opinion, we might only see, it is a real possibility. We might only see the same highs that we have seen now back in December, to 242, anywhere in the next 4 years. Look at that. It says there the 31st of May. So May 2026. So we might have a very, very bleak picture going up, in the next 4 years. We might enter bear market territory. And, so nobody knows what's going to happen. But I just wanted to make this video to show you guys, this line that I've drawn. And, it just shows how, this past, look at that, this past, like I would say last year in effect, like 2021, mostly 2021, how that was just disproportional to the way the stock market trended over the last decade. And so I can completely understand, that it's just hyperinflated, and I can understand that people say, that it's in a big bubble and it's going to burst. And I think that, the bubble might have bursted. But what is the good news? The good news is that the longer the stock market, and I keep on saying this in every video, and I'm being so repetitive, but you can never stress this enough. The longer you stay at a lower price, the longer you stay at a lower price, the more buying opportunity there is. The more time you have to get your cost basis as low as possible. The more time you have to consistently buy into the markets, either monthly or weekly, and in effect just dollar cost average into those markets. So just as an example, so let's say it does take 4 years. It's going to spend a lot of time in this territory here. It's going to spend a lot of time in the 200, the upper 200, hopefully not below that, but the upper 200 time range. So this would just allow you, if you bought high, if you opened up trades here, at very high in the market, you are probably down like a lot currently. And I am one of them. Like, I've only started this RT investing portfolio. I've only started this in June of last year. So you can see my first, the first position I opened was in June. But back then, look at the open price was 220. Currently it's 225. But then also I have been buying since, and I've bought higher than what the price currently is. So my average open price is now currently 226 on this portfolio. Now 226, you can see, is right about where it is now. This is my current, my average buy-in price. The first one I opened was around about here. Look at that, June, around about 220. That was the first time I bought in. Now, to get my cost basis as low as possible, if this does drop to like the 200 levels, I'm just going to be consistently buying in every week, every month. You're just going to be buying in, getting your cost basis as low as possible for when it does get to that point where we are today, and you will just be in profit so much sooner, and the gains will be, just a lot more than it would have been, if you have not, kept on investing during this time. Now, what is the best way to keep on investing during this time? And honestly, in my opinion, a platform like eToro just makes it so easy for you to do that. Now, I am a popular investor on eToro, and you can copy my portfolio. I'm going to show exactly what my portfolio or my username is. But what I want to stress is that it's not just a once-off copy. What you need to do is you start the copy, and then either weekly or monthly add funds to the portfolio. And then also remember to select the copy open trades checkbox to make sure that you consistently buy into all of the different asset classes and into all of the markets that the portfolio holds. Okay, so let me show you quickly. Now, this is the RT investing portfolio. So you can see that we are invested mostly into the American markets and many other things. We have a well-balanced portfolio. You can go and look at a few posts back. I've made a pinned post where I actually explained the complete breakdown of the portfolio. So we are well diversified, well hedged, but we are not immune to the current pain that we are feeling in the market, because I am not planning on hedging the market. I'm not planning on shorting the market. So we just have to weather the storm, and we need to be consistent in how we just invest in this time and dollar cost average into these markets. I'm going to log into my own portfolio or my personal account, and then I will show you how to dollar cost average into the RT Invest portfolio either weekly or monthly. All right, so I've switched now to my personal account, and let me show you how to dollar cost average. Now you can see I am backing myself here from my personal account. I am copying myself with $6,000, and you can see that we are drawing down quite substantially now because we are mostly invested into the American markets. But what I'm doing now is I am adding funds weekly with eToro's recurring deposit, and I would basically just be adding funds, and I would say I'm investing, let's say, $200 every week. So I would be adding $200. I would leave this copy open trades checkbox on, and then this button would say update and not deposit now because I don't have enough available balance. But it would say update, and you would click update, and in effect you would then go and buy into all of these markets. So you can look at this. The average open currently, my average open from my personal account on the RT investing portfolio currently is $232. So you can see at all the many times that I've dollar cost averaged into this market, but still it is not as low as it is now. So I will keep on doing this. I will keep on buying into this market. So in order for me to get my buy-in price, my average open price as low as possible, I would need to keep on dollar cost averaging into the RT Invest portfolio. But yeah, that's it from my side, guys. Thank you so much for watching. If this video helps, if it just helps you to stay calm during this this turbulent times, then give the video a like. Please consider subscribing, and yeah, also if you want to try out eToro, my sign up link is in the description below. And yeah, guys, just stay calm. This is really, really normal, and actually it's the best opportunity that you can ask for, because it's not every day that stocks go on sale. Stocks goes on sale like they are going on sale now. So thanks a lot for watching, and I'll see you in the next one. Goodbye.